Sprint reported their earnings today, and boy, did they deliver a loss. It was a whopper, $874 million. So the question remains for this company, are they going to turn things around as a result of being purchased by SoftBank and all the other purchases they've made? Or is this just dead money in this stock? Well, I'm joined with Scott Redler from T3. So Scott, you know, it's hard to call on this one because it's been flatlining, but it could have a good future.
Yeah, well, way back when I didn't really know much about the story. I just knew there was a really nice chart pattern. So if we take a look at that chart, you'll see back in March, you know, it had a nice tight consolidation above that 550. And I think some were thinking it could get taken over. They weren't sure, but above 597, it made sense. And from there, you had a quick move into the 630s. And then that news came out and it already went to 7 to 7.5. And as you can see, it was there for like 2-3 months. So with that said, I was like, why not take some off the table if you were involved? Because that's the price that they were looking for. Why look for an extra 25 cents? So if you did that and you didn't, you know, stay involved for that move below support back down to 580, you know, I think that you have the luxury of buying back. I don't think many were looking at Sprint as a fundamental story. They were looking at, you know, it was trending just nicely.
Purely at the chart. Well, you know, I'm questioning that part where you got the circle on the bottom because I'm not convinced it can't break below that support, and you got the arrow pointing up. What are you seeing that tells you it could go back up?
Well, okay, you said they had a bad report today, which is true.
Yeah.
Okay, and it's up on that. So that tells traders it could be priced in. So at least the earnings risk is out of the table. So if you were worried on how it would react to earnings, you weren't involved. But then today, earnings are out, it's up 20 cents. So you at least now have a level to trade against. So if you buy around 590, you could then put a stop in on that chart at around 550, which we have that line if it breaks that. You know what? Your risk is defined. And at least you don't have a big earnings report in front of you to worry about. So I say buying versus that area could make sense. If it just trades purely on technicals, you could see a bounce back where that arrow says, back to maybe 640-ish. But in order for it to get back up to 7.5, to get the real bang for the buck, it's going to need SoftBank to come back in and take it over.
So is this a company that you really should just look at the chart on this, or do you really have to weigh both the chart and the fundamentals? Because you know, it's a tough one.
I think if you're going to have any type of size, you need to know both stories.
Okay.
And then if you're looking for a trade, it could only be at compelling spots. Otherwise, like you said, it could lull you to sleep and there's no reason to be in it. You know, if a trader is using a portfolio approach with 6, 7, 8, 9 stocks, then maybe if you like the story, it's worth your attention. But if you're going to just trade Sprint back and forth all day long, I don't think you're going to be reaping the rewards of an active, fast-moving stock market.
All right, so it's a sleeper, it sounds like. That's it. That's Sprint. Be careful where you're going in and out on this stock. It is not a high-priced stock, but it's got a lot of risk potentially in its story. That's Scott Redler from T3, and I'm Deborah Borchardt with The Street.